I thought maybe we're after revealing the traits.
I will repeat it again because not everybody that's registered with us always attending. People have different activities. So I was trying to tell you about trading psychology. That's one of the reasons why many people are not making money. It's not found in the chart. It is found in our mind. Do you understand? Trading psychology is not here. It's in our mind. Example is what I think. Is it promise here, or I don't know who asked me that question. Okay, no. Lawal asked me, if you go into auto trading, what is the guaranteed return? That's a psychological question because immediately you mentioned that that he's not going to be in control. Immediately psychologically, he perceives another concept. Okay, that should be a promise. Do you understand? So it's a psychology. The way you act on things, that's the way it will play in your mind. Sometimes people will think if they give you money or you invest money with you, that they may lose money. One, many things plays around it. Either the previous experiences of people who run maybe failed investment project and stuff like that, it is back in their mind. They will now say, okay, do it by yourself. Okay, let me do by myself and take everything. So these are all psychological. In any market, media, everything, psychology plays role. People they try to understand people perception, people psychology, and play along, providing product that is in line with what they think and what they believe. Do you understand? And it happens in everything. So if you don't understand it properly, if you keep falling victim of product that you don't want to buy, go where you don't want to go, be in a relationship that you don't want to be in a relationship, something. So it's psychological. It's like mental control, mind control. And whoever that controls your mind will control you. So it plays role in psychology, in trading, in a huge way, which if you overcome trading psychology, you'll be able to be a strong person and also a strong trader. So now, like I just said on Euro US, we've been emphasizing on strong US economy, which obviously it has been established clearly that strong economy is tied to the currency. The currency of the country is tied to the economy, not necessarily the stocks available in their exchange. No, it's the economy. So if the economy is strong, these basic things that controls the economy, it will definitely affect the currency. So because of that, that's why we emphasize on strong sell. Non-farm payroll was huge. In fact, it was a breaking news. I saw it on CNN and a lot of news media about it. You saw it everywhere. So, but it came in at a very low price. I think somewhere here too. The price came out here. So it came down now and shoot up. So that's why we said when it's shooting up like this, maybe we should emphasize of like looking for any opportunity to sell more than buying. If not, I could have said we should buy because Euro US is actually at a very low price. But because of the Trump coming into power, we just have to be careful to see because fundamental will vary technical at all time. Fundamental, it will vary technical at all times. So that's one of the reasons why you may follow technical analysis after a while, then it will change everything. My mentor then is a technical trader. He plays along, but he only lose money because of fundamental. Anytime fundamental come, then it will change. Then we still have the same analysis on JBP USD. We emphasize on long sell. It's not for everyone. If you cannot go for long term, don't go on USD, JBP USD because of we understand the strategy we are using here is breakout. Something is about to break on weekly. So if you don't have enough capital or cannot wait for a long time, don't go into it. Because if this thing should break out, you make a lot of money because of the previous support was here. You don't understand what I'm explaining. So it's a long time effect. It's not something that when I say week, it can take 1 week for one candlestick to form. Those of us who monitor candlesticks, it can take 2 weeks for 2 candlesticks to form. So if the market is to drop to this point, it's gonna take a lot of time. So you should expect maybe 500 to maybe 800 pips drop. So it's a long-term investment. But if you cannot hold on, fine. Because of that, then assuming if it didn't work, we try to emphasize on a closer stop loss around this price. These are the things that we did last time. We just want to keep repeating them so that it will be able to be established in your mind. You know what I mean? Then there's another one we did. Let me check. We have a buyer analysis. Our analysis on gold is still valid. It can never be invalid for now. I don't know. I think somebody was buying gold, Mensa and Alice, or somebody again. So I think Alice here, you say you close your gold. So we told you guys, once there's any short drop, you should be able to look for opportunity to buy. I think it's playing out that way. We buy gold more than sell. That was the one we posted when it was here. Then if you can see very well, this dropped. It just came down now. It has gone up and past that level of sell. So imagine some of us, now this is why we lose money. We may find way to place a sell that is dropping, only for you to wake up the next day, see that the market has started continuously going up. Why are we selling gold, buying gold? That's why you need to know. There are more demand in gold, more than we have had in the last 12 years, about $102 billion demand from miners. And the gold is designed to be bullish more than bearish. Take note, gold is designed because for hedging, people use them to hedge asset classes. And it has never fallen. Gold price collapsed around 1970s. Since then, it has never collapsed. So forget about the margin. A margin account makes it to be volatile. So if you see 200, you maintain that the gold has come down. No, it has not come down. Somebody said, I bought gold yesterday after the retracement. Fine. I think you should be on profit as well. And so these are the things. So our own main and objective is to guide you and help you to identify potential opportunities, the one that has potentiality of giving you money. And because that is how we make big money in our trading. Yeah. I'm so sorry. If I see your name, that your name is not registered in our class, I will remove you. I don't have any apology to that. Because people that are registered are not stupid. If I want to do charity, I have motherless babies. I can go and do charity organization to them and disabled people. Or you apply directly that you are handicapped, that you need charity. Then you join my NGO. I'm part of the people that will receive care. But if not, I'm definitely going to remove you. I've sent some of you email. So if you not respond to me, 5 minutes, you're out of this place. Okay. Okay, so now, as I was saying, so gold, we maintain bullish in gold. Guys, are you understanding the psychological in trading? That despite that we say maybe that will be sell, that will be buy. When we say that will be sell, you will see that there will be some bullish. Do you understand? So when we say that will be buy, you also see that there is some bearish. So that's why I told you, if you want to be a good trader, you should not be capturing out the market. Focus on one side. You don't understand? So when you persist on one side, you have chance of making profit. If you keep following the market up and down, you lose money. Take note of people that trade on regulated exchange. For example, some exchange don't have short position. It's only long. For example, Nigerian Stock Exchange. Even some exchange too abroad, they don't have short position. Some stock exchange don't have short position, mean that they don't sell, they only buy. Crypto doesn't have short position, cryptocurrency. It's only buy. So if crypto drop, everybody lose money. Nope, so. I think I'm right. If cryptocurrency dropped, price of crypto dropped, everyone invested in that coin will lose money. If it's rising, everybody investing in that coin will be making money. So there's no short position in crypto. Unless on CFDs, brokers who offers crypto on CFD give you a chance to do go short on CFD so that it can make profit from the falling price. Some exchange also have introduced short position in there, but not all. Now, that is to tell you that you can remain in one side of the investment or in one side of the market and be profitable, because there are side effects of jumping up and down. When you keep jumping up and down, it means you are speculating, one, and it also obviously means that you may not understand what is happening. So at the end of the day, especially when you keep jumping up and down at maybe short interval, at the end of the day, you may end up not getting money or not being stable. You may make profit though. You can trade like 6 months, 7 months, keep making profit. But at the end, you may end up losing money one day. Then we analyze. I don't. Did we analyze here? We analyze. Okay, buy here. This is daily chart. We analyze buy, but it has not triggered on the USDJPY. We analyze buy. Then we analyze yesterday bullish on oil if inventory come out. But I told you guys that if you are buying, you need to be very, very careful, because buying at a higher price has some impact in your trade. Me, I've had the first sell, it has shoot up. I will still continue to look for another opportunity to sell. WTI is already 79. Brent hit Brent crude hit 82 yesterday because of the inventory report that came out. So do you understand how the inventory report played? Did it work or it did not work?
Yeah. The inventory report yesterday worked positively as a result of the shortage of the 2 million.
Yeah.
So there was the market was very bullish.
Yeah.
But me, no issue, but I'm still on sale, although I entered at 78.8.
Okay. For me, I've had my first sell. I'm going into psychology. That's why I'm trying to reverse all these things, so that you're trying to understand some certain things, why I'm emphasizing on all these things. So I've had my first sell, my first entry with a small volume, but I'm still targeting something. I was using people I know that trade oil, and there are people I know. Let me know whether they're in this meeting. They have told me clearly they want to trade oil. One of them is yeah, you see, Mensa, you specialize in oil and gold. There's another person.
I want to specify. I want to specialize in oil.
Okay. Okay, Felix oil. There's another person.
Oil and gold.
Sorry?
I want to also trade just oil and gold.
Okay, so that means you guys now will classify as commodity traders. So anybody call you forex trader can get angry. So you want to go into commodities, precious metals, and oil and gas. That's what you are classified.
Okay.
So if you want to register your company now, if you want to file properly for authorization, don't put forex or FX, put commodity dealing firm. Then you categorize yourself into precious metal, oil and gas. Maybe if you want to go into agro commodity, you can say add it. So you get approval really quick. Somebody call my name.
Yes, it's me. You said you're already going on a sell for oil. Was there any reason, like, or is it because it's just gone up too much?
One is that is high, but another reason is the psychological class we want to teach now. So you know the reason why I want to go, why I'm considering sell. One is higher price. Do you understand? So I'm making the revision to lay a foundation to give you a quick note about the distance, the trading psychology. Do you understand?
Yes, yeah, I'll wait. Thank you.
Yeah. Then US 500, then we analyze by.
Please,
I don't know who can bear witness. When we analyze this market, it was here. It was sign of bearish. I did not buy it because I don't trade if for the fact that I don't trade some instrument doesn't mean that you shouldn't trade it too. Because it may understand the market more than me. It happens. So you know it was bearish when we did the US and UK economic outlook, focusing on the indices, the stock index, and the currencies pair of them. So after the whole analysis, it was clear that that will be bullish. Then we emphasize on buying it. That was 3 days ago. I think it was among the 4 days ago. So it has gone up according to what we have analyzed. And US 30, let me check. Yeah, it has also gone up according to what you've analyzed. So assuming some of you place trade on it, whether it's demo or live or funded account, then you'll be able to by now be on profit. Do you understand? Somebody asked me, I said, if you want to go into commodity market, you try to file your application properly. If you want to register a company, if you deal on gold, then you can just say go into commodity dealing firm or commodity trading company, then gold and precious metal. By next week or in coming days, I don't know, because I'm reaching out to people who work with us, with their dealing firm members. So they are just telling me that they are analyzing their yearly outlook. So they will come and give us lecture. I can teach you, but I want to teach. I want you guys to learn it from where you can open the account directly on spot market, gold spot. So you can be able to start investing in gold instead of keeping money in the bank. You can convert that money in gold through exchange, and it also be kept in the bank. It's more better than real estate, because you can liquidate it at any time. Real estate, you can liquidate at any time in case you want to get money. That's why most big investors are big investors are more investing in gold, like big firms. They invest in gold, all the big trading firms. Now, that's what we call supply zones, like demand zone and supply zone or resistance zone. So US, I don't know if you can bear with us when we did the class. So US Canada is forming that zone. Do you understand? It's actually forming that zone. And if it's forming this resistance zone, it could be a strong sign that the market will crash one day. So once a zone you keep forming, or like you keep resisting at a particular point, is giving a strong sign, technical sign of a crash. But we wouldn't just believe that the dollar will be strong all the time. Canada will also be more strong. So we're trying to consider trading one strong currency against the weak one. You know what I mean? So somebody was on this currency before. I don't know whether the person have left, but it's actually giving us sign of sell. So we'll be monitoring it. So if we're able to get some proper confirmation, we'll give you guys the analysis. So anytime we send it on the page and make a circle down, just know that we are expecting a price drop to some certain level. And if you make a circle up, then like this, just know that we are trying to tell you the entering point. Do you understand?
Please repeat it.
I said the US Canada is forming what we call zone. If you refer back to our previous teaching on technical analysis.
On the circle.
Okay, on the circle. So
yes.
anytime we make a circle down, like we make a circle up like this, we are trying to tell you the entering zones. So anytime we make a circle down, we're also trying to tell you the expected drop, the price we're expecting to drop. So if you make a circle above those areas, above the like this on top, like this zone now, we'll make a circle like this. I make a circle above. We are trying to tell you the area you suggest putting stop loss.
Okay.
Do you understand? So now I assuming that there's another maybe resistance here, we can make a circle like this, So we are trying to give you reason that this, and this may cause this. Do you understand?
Yes.
In case you have challenge to understand, you can see, you can refer back to this video because of it's recorded. Okay. So now I'm going into trading psychology. And how to
Hello, Mr. Uche, please. Sorry to draw you back. On
Okay.
this oil, in your own analysis, where do you think maybe somebody can put a TP? Because me too, I'm trying to put SL because I'm trying to manage my account so that I don't get more than 2%, irrespective of what. Because like I said, I entered at 78.8, and although it has gotten to close to 80, because if I'm thinking of
right?
51 plus, yes, I'm on sale.
Sorry. One of the SL you need to put, one of the things you need to consider in SL is a risk. So if any SL that is not in line with your risk, it can close.
Okay.
Oh no, for me, I will put a stop loss on sell using this resistant or this resistant, which is around 85 or 84. Yeah.
Okay.
But now I will try to make sure that try to calculate the PIP value. This is 79. So okay,
the only challenge I had is
Brent?
this. I actually put it at 86, but I just started to shift it there, although it's above 2% of my risk. But knowing that it will not get there, instead of
okay, yeah.
that's the
You're
challenge
on
I
Brent,
have.
right? You're
Because
on
I can't
Brent.
it's at yes on Brent.
Okay, Brent is
No,
at
not
86.
Brent,
So
WTI
86 is 600 pip. Is very, very
is
from
high.
here to 86 600 pip is very, very long. Yeah. Instead of waiting for 600 pips to go, that means you have missed 600. Assuming you get and get there, that means you have missed 600 pips of profit. You know, it's long. You don't understand? From this price to 86 above here, that's 600 pips. It's a lot of money. Although this resistance is broken. Okay, let me go on weekly chart because I will see more overview of the chart. Okay.
It's WTI that I entered though.
I thought it's Brent.
No, WTI, sir.
Okay, WTI. Okay, yeah. Even if you look at 86, this is 80. That is also 200 pips. WTI. Yeah. Imagine if market get to that price, is gonna be very big opportunity for buyers that they have make a lot of money. So try to consider adjusting. What you have to do, check the value, what it will give you at the end. Do you understand?
Yeah.
Yeah. So if it will give you much losses, don't go it. Otherwise, unless you hedge it. But I'm not sure you will get to 86. I'm not really sure. I'm not sure. Because of what was dropping was minus 2 million barrels. It's not that the difference is in supply cost is much.
Okay.
Yeah.
Thank you.
So now, I pray you build a strategy using this course I'm showing you now by making a very decent decision. Now let's discuss on the psychology of trading. I'm sure those things we analyze, not all of you is trading them. Now, psychology of trading. So what we will look out for is market psychology and the investor psychology, means trader psychology. Then what moves the market? Then we will now draw a trading plan. Do you understand? The psychology of market, the investor psychology, that's how market reacts. The investor psychology, what traders know, how they react in the market. What moves the market? What moves the market? Psychologically, obviously, if we think what we say what moves the market is the news or demand and supply. But psychologically, there's another thing that is behind those things. Then, and the trading plan. Now, psychology has to do with your mental and emotional state that influences your decisions when you are trading. So now, when you develop a strong trading psychology, it will help you to make a constant success and also help you to build a strategy. It also helps you to be disciplined. I used to say that if you want to be a good trader, your emotion needs to be dead to some extent. So you don't need to be emotional. And if you do some courses in finance, they will tell you that you don't invest with emotion. No matter any investment you want to do, emotion should be separated from it, which is difficult for someone to separate his emotion from his money. Do you understand? It's like separating your love from your emotion from your loved ones. It's difficult. Do you understand? So, but that's what they will tell you. That's what you need most to be a successful investor. That the emotion will be separated from the investment. How possible can this be? The money you work almost all your life, or 9 to 5 to earn, somebody tell you not to attach emotion to it. You should just invest and let it slide. So now, but that is also one of the reasons why most investors are not successful. Now, what are the things that you need to understand about trading, about market psychology? Okay, I will tell you that one later, because it's down. One of the things you need to understand about investor psychology, okay, together with market psychology, is that one, fear demonstrates a very big role in the market. Fear. And the greed also play a very crucial role. These two things is what controls the market. Now, fear can lead you to make decisions or premature exits from your trade. Have you not discovered that people will tell you that forex can give you a high BP? Have you heard that before?
Yes.
It's very dramatic.
Yeah. The more the thing move, the more your BP move. Like this, it will keep fluctuating. If you fluctuate down, your BP goes down. If you fluctuate up, your BP go up. Sometimes when you start trading for the first time, even when you want to sleep, your phone will be near you. If you wake up, you won't go to your WhatsApp chat again. You're going to the market. You won't even check messages, especially when you have a trade that is on, especially the one that have not gained. The one that is gaining, immediately you see small profit, you're closing it immediately. What is playing there is psychology. Do you understand? I do not know that it may be at loss for a couple of days, but anytime you make profit, you close it sharp. Once you make profit, you're closing it immediately. That is psychology. So now it is based on fear, which can lead you to make all this hesitation, and it can cause you premature exits from your trade. Then so greed can cause you to overtrade. But in the market entirely, greed and fear controls the market. So the whole money market is what controls it is greed and fear. You don't understand? Greed and fear controls the market. Now, how does it work in the market? Let me use Bitcoin, for example. My friend have told me now that Bitcoin will get to $1 million. Do you understand? And another person told me that it will get to $200,000. Do you know the seed they are planting in my mind and in other people's mind is the greed, not fear. The person can go and even sell land, say something, and invest it, keeping it there, waiting for you to hit $1 million or $200,000. And just to discover one day that the market has crashed from 100,000 maybe to 30,000. Now, when there is news in the market, when there's economic news, the investors act on it using these two factors, greed and fear. Investors act on it. In any exchange, they use greed and fear. You see them, they want to go and invest heavily. They want to go and invest heavily. Then on the fear aspect, some people will be scared of investing. And this thing is what caused that volatility in the market. Greed and fear. Even ordinary announcement from a government official or decision maker can cause panic in the market. So now the greed will make you to make excessive investment decision, placing more volume, placing more lot size. And now another thing you also need to understand in the market is people can develop a lot of confidence in the market. Now, how can this happen is that when you're following somebody or you have better analysis and it works. Somebody was on my live stream yesterday. I don't know whether the person is here. He saw that it was the first time of observing oil and the CA and the inventory report, that he was curious to observe it live. So that he discovered that immediately the report came out and it was on the supply, he quickly, that he saw how the market move. And I could see from his face, this guy may take risk next time. Because you have seen that one has worked. He has built his confidence. If you come up maybe next week on work, another confidence is building. No, it may try like 2 or 3 times it works, or 4 times it works. It has already, the person will not develop overconfidence. So now, how to scale through of is that never you develop overconfidence in the market. As a trader, don't develop overconfidence. No matter how the strategy is, don't 100% rely on it. Do you understand? So overconfidence, the guy may test that inventory now maybe 4 times or 3 times or 5 times, and all the whole 5 works. His level of confidence will not be here. I can tell you. If he's so confident in himself, then the 5th or 6th one, he may see, okay, this is working. He may now apply greed. So, okay, let me use big volume since this thing they work very well. And he may use big volume to trade the next one, or the 6th one that we think that will work. Maybe that one may not work. Then he lose money. So now, how to develop a strategy on is that no matter the strategy, the analysis, the confirmation of trade, don't develop strong confidence or overconfidence on it at all. Then you may need to understand this one. So the developing a winning mindset is based on our plan. Then you know that some people like to focus on profit more. I'm not saying something is wrong with it, but trying to focusing on plan is more important than focusing on profit. There was some days I don't even know how much I make because I don't check those things like that. What matters to me is to make sure I focus on my trading and plan, how I trade. It's at the end of the day I will cross check. That's when I say day, it may be at the end of the month or some couple of days when I want to withdraw money and stuff like that. Although as a company, there's accountants and other people that track the record of all your trading. So that's also why sometimes I don't focus on profits. I don't even know how much was initial deposit in some of the accounts. Even my own money, I can't remember about the initial deposit because the process I'm following is more important than the profit I'm making. Since I know that I'll make profit following my process, those processes is like those strategies we have developed is what we stick to and keep using them to trade. Now, for example, I told you guys about gold. That gold, the process we're using in gold is make sure that the process we're using in gold is to make sure that we place more of buying, we buy more of gold than selling of gold. That's the process. So now, even if I buy gold and lose money, I will not change my mind because I'm not focusing more on the profits. I'm not saying you shouldn't make profit, don't get me wrong, but some of you may buy gold, maybe at the initial time it dropped, you lose money, immediately you not switch back to sell. Only to discover that you get caught up on that sell and the buy continuously going up. So that's why if you make a first buy, second buy, if you see where the market is going and you place a buy, or a sell. If market is going that direction of sell, even if you see a bullish, don't change your mind so quickly. No, focus on the process which you are using to make the money. Then at the end of the day, you cross-check, try to know how much you have gained at the end of the day. Then another way of building a strong trade psychology is to think for a long time. I've made it to my notes down. I will show you. If I can share this on a spreadsheet. No, this is just a note. It's not a spreadsheet. Is more of mathematical formula. So you as a trader, if you want to trade and be successful, make sure most of the trade is for a long time. If you check very well, I don't give you guys short time analysis. I always try to project something to you so that you can be able to make big money. We have a goal to know whether traders can make at least $10,000 to $100,000. This money can be made just in one day. It's something that built on process. So people who trade for a short time lose more money than people that trade for a long time. But I understand that most people want to come in for a short time and quick profit. But you may discover that it does not always work out that way. So long-term projections give more money. That's why our analysis is focused more on minimum daily. If you check our analysis, we analyze more daily and weekly. So long-term projection is where you make more money than when you're looking for 15 minutes, 1 hour, or 4 hours, or 5 minutes trade. No. But now, let me tell you another psychology in trading. Do you know that? Have you gone to some training or brokerage service training where they give you 15 minutes chart? Or where they teach more 15 minutes or 1 hour?
Yes, I have.
Okay, now, do you know the psychology behind that?
I was told it was scalping.
But that's not the psychology behind that. Psychology behind that, yes, they want you to scalp. Yeah, they also give you impression that you can make big money in every minute, in every seconds with your mouse. But psychologically, they want to make more volume from you.
Yes, because the more trade you place, the more commission they take from you.
Yes, yes. And I also know that you want to pick money. Everybody is in haste to make money, everybody, including me. We only come down who will lose money. Don't understand? Once we lose money, either we come down a bit, or sometimes I get angry. No matter whatever, in any business, if you lose money, you just like come down a bit. You may not tell anybody. It could even be that you bought a product that you think is original, or your friend has told you not to buy that product. You order for it only for the market, for the product to come in, and it's not exactly what you think. Yeah, then immediately you just go quiet. You don't want to tell anybody about it. Then do you also know why people lose more big money before they come out and say it? Do you know? Why? Because we want to make money in secret. We don't want people to know how we're making the money. So we may get clue to one guy, either online or offline, or a friend group that will just try to tell us how this will work. Don't tell anybody. Let us cash out. So you want to make your money and buy your car, live your life without telling anybody. So only for you to go into that thing psychologically and lose money. And that may be when you can tell somebody, or you just went quiet, you went silent. People will not know what they're dealing with, that you went to do the wrong investment. But if you have maybe come out and make it known to people, people may have been able to talk about it. Oh no, don't go into that. I've gone into it before. So now that is psychological. In trading, most brokers and most training centers that is affected to brokers, they draw a trading approach psychologically to make sure, give you impression that you can make big money per minute, per hour, using all this code, all this focus trade. All of us are part of that channel, including me. All this big focus, they may tell you in a day that breaking news coming out. Then do you know why people like signals? These are psychological things. Because they give you signal, psychology that at least you can drop 10 signals, pick anyone you want to pick in a day, cash out. So they're trying to build a psychology to what they think, that this is how you want it to run. But those things we're thinking that it will run that way can never run, can never be can never work effectively. Now, that is why if you play the opposite, you become more successful in trading, which is long time. There's no shortcut. It's difficult to make money very consistently on a short time. It's difficult. That's why people end up blowing their account. Now, psychological can give you a long-term approach. You see where the market is going. You see how that thing has performed for over a period of time, despite that maybe there is a sell or there is a buy volume in it. I'm talking about if a market is going by, if a market is going by like this, going by. So you see that despite the buy, there are some sell market. But now they may break it down for you on a short time frame. You will not begin to catch up those sales. Only for you to discover that one day you play the sell and the market keep going up to the point that you blow all your account. That is psychological. You hardly see a broker, like a retail broker for that matter, that will give you a knowledge of going for a long-time investment. They want you to trade it as quick as possible. Then on the risk side, so on the fear and greedy side, so the best approach to overcome trading psychology is this. How to do it? I'm trying to come to your question. Is it Cynthia? How to overcome it is this. As a trader, you have to be afraid when others are greedy. Then, and be greedy when others are afraid. So this is a strategy now you will need to adopt if you want to be if you want to be successful in trading psychology. Let me use Cynthia as a case study. I hope you are there with me, Cynthia. Please, Cynthia, that's that question.
Yes, sir.
Now, why I want to sell oil, and why I'm trying to consider selling oil is that one, this market has gone up. As this market is up, this many investors will lose money. Because people are assuming now we like to post profit on our page. Maybe I will ask for that permission. I'll start posting BB profit on our page. People will ask, anytime we post that, and that's when people will chat us. How far? Can I join now? Do you understand? Anytime we post that big profit, post, that's when we will be receiving more chat. Hi, how did you make this one? Can I join now? Is it okay now?
Yes, that is true, sir. You need to be doing that too.
I used to do those things before, but I've stopped.
Okay, sir.
I used to do them. You know, this thing is not the first time we've been. You know, I don't just know. I just stopped posting
Those most Instagram influencers, that is what they do.
Yeah, because they're playing on your psychology. If I want to play on psychology, we know how this thing works. They play on psychology. You need to understand those things. Now, but that time, this market was here. I think Felix was in that class. Felix started last year. Started last year too with oil. You know, that's the time the oil was here. You know, it was bearish, clearly bearish sell. But we keep talking about this thing will go up. Now, that time, if you post anything, people would like to act on it. In fact, they may tell you, are you sure this will not crash? Do you understand? Now, on this point is where I'll be greedy. That's why people be afraid of trading, of buying. With me, I'll be greedy here. That's how to play on the psychology now. But here, people will be greedy here. Cynthia, you see this point? You see this area? People will be greedy because the market is going bullish. So there will be media hype. The market's going low, cash out now, cash out now. It's something that's happening in crypto. As crypto is hit 100,000, you see that almost all the crypto boys are now like, talking about it everywhere. But at that time it crashed to 30,000, everybody went quiet. In fact, nobody want to talk about it. Now it has gotten to that point. So on that level, now you see people will start coming to invest in that crypto and end up losing their money. That's why we say the greed and fear continues, but how to play along, be greedy when others are afraid, and be afraid when others are greedy. Because of this, it has gone up. Cynthia, take note. I'm scared of continuously buying at a higher price. Do you understand now?
Yes, I do understand. Yeah, I understand now. Yeah.
Sorry?
I understand now.
Yeah, so I'm afraid now, but I know that people are kind of greedy. It's something that when we post profit, that's when people, investors come and ask us, how can I invest now? Invest what? But when the opportunity was there, we asked you to invest it. He said no. So if you invest now, no chance of making that profit. That's the truth. I will always say no chance of making, because what gave us that profit is in the past. That's also why if you check some stock brokerage website or some brokerage site, they will tell you past performance. I use stock broker, not CFD broker. Stock broker is that they use that word more. They will tell you past performance is not a guarantee for future one. Because of you see that the market performed last year 50%, and that time you refuse to invest. You have seen good performance, you now come and invest on a higher stock. No, that is not a guarantee because it may drop. That story I used to share when I used to do training. That thing happened around 2011. I trained one commissioner, then a state commissioner, a commissioner of works in one state like that. So after teaching him, he told me that he lost 45 million in 2008 financial crisis. I don't know if anyone of you can remember that time. That was the financial crisis of 2008.
I heard about it, but I wasn't aware.
So he said he lost 45 million.
Yes,
Yeah, 45 million naira, not dollars anyway. But and I said he was talking about it in regard that if he had come and learned trading that time that he wouldn't have lost that money. Remember, even that time, my knowledge of trading have not even improved to this level. That was 2011. I asked him, how did you lose the money? He said that he bought the share 5 million. Then before you know what is happening, the share value grew to 5 million. The share value from 5 million to 25 million within a short period of time. So his stockbroker asked him, at this market, we get to, is it 5 naira per share? Or 8 naira? Yeah, around 8 naira per share. So he now went and brought another 40 million of his own and put on top of it. The whole thing sank. So that if he sell that share now, it's not even up to 5 million. Do you understand? Do you understand the psychology there? So he now said, if he had known that share grew to 5 million, would have been the best time to sell off. But he was not greedy. A share that grows to 5 million, remember, share does not grow fast. That one grows to 5 million to 25 million. He now went and put 40 million on top of it at a higher price. Then the market came down together with the whole 40 million. So he lost a total of 45 million of his own. Probably, I don't know what he was targeting, either to be a governor after 4 years, make money from the stock market and get ticket and contest. So after teaching him how to trade on this, he now discovered that it's good to trade on a low price on the buying side and then sell off at a higher price. And also to be greedy when others are afraid. People will be afraid when the market is not good. But that's when big investors invest. Do you understand? That is trade psychology. If that man had known, he wouldn't even have, me, there's nothing that would make me, I've closed all my buying on oil. I can tell you, I'm sorry, I have to tell you. Because people that was with me do know that we bought around this price. Late December, we bought around this price. I keep buying. In fact, I bought here, the market dropped again. And then it hit one stop, then I bought again. And we keep buying within this price. We're emphasizing more on a support level, this area. They will now go into data analysis on oil and stuff like that. I know that you see this price, it's good for me to buy them. I keep buying it now. Finally, the market shoot up. Do you understand? That is psychology. So you become greedy, especially on the market that's very, very low. Market that's very, very low. Buy them more. That's one market we saw here. Let me show you. There's one market we saw here. During our forex class, I think it's in New Zealand USD. New Zealand USD. Let me bring it up. It's a good market. New Zealand USD. It is still selling, but it's a good opportunity for what I'm teaching. Okay, yeah. You see this market? I saw this market. I put it on weekly chart. You see this market that have come back to this point, and this happened in 2022, and it has come back again to this point again, and it came down from this point. Then had what we call a breakout. Here was breakout. Here. So there's chances that this market will go up, very chances in the future. You see this market now, this is what I mean by be afraid when others are greedy. So big investors can start investing in this market, buy. Do you understand? They can start buying this stock, this particular instrument at a low price, because it came down back to where it were, let's say 3 years ago. The same price. It was one of our facilitators that brought my attention to this instrument. For me, assuming the time I used to trade on forex, I will be paying attention to this market using fear and greedy. I would like to buy it, but most people would like to buy because they will say, that pair I lost my money. I'm not going to go there. So when it's very, very down, that's when we like to buy it more on a bigger volume. So when it's very, very high, we sell it more on a bigger volume because we have chance of making more profit. Yeah.
But Mr. Uche, I saw this chart,
Mm-hmm.
but because of fundamentals, that's the reason why I'm afraid of this trade.
Yes, I know. I know too, because of what this Trump is doing. But they see that market is a sign of being greedy when people are afraid. Do you understand? One, the same thing happened on Euro USD during the Russian crisis. The market came to 0.9. That time we have not done trading school, but we as a group, I used to give them analysis because it was a group of investors. They were not like people that want to learn. I told them, I'm giving you analysis here using cryptocurrency concept of trading. Like cryptocurrency traders like to look for potential coin. Do you understand? That's what they look at, a potential coin that has capacity to rise. Then later they will look for the price. They will buy it at a lower price. They can buy more. That one person called me then. He said that he bought a coin using 12 million and sold one of them $100,000 each. The man was making over $1.something billion. He's a Nigerian investment banker. He's in Ikoyi. He called me. We spoke for hours. He was greedy when others are afraid, and afraid when others are greedy. So now, on that note, I told them, you see, Euro USD is a potential asset that has volatility. Now the price have come down to 0.9. That's below $1. Please, you can start investing in this particular pair. Buy them at a low price. 0.9 is the lowest. So for now. So after like 6 months to 7 months, that market went to over 2,000 people. Do you understand? So imagine people that have big money. Even if you have small money, put money there, leave it for a long time, you make a lot of profit. That's the example of being greedy when others are afraid and being afraid when others are greedy. That time people don't want to invest in Euro US, but that was the best time to invest because of Russia and the Ukraine crisis that started. So the European market crashed very much down. Then it was ginger. When price of ginger crashed in Nigeria, 1 ton of ginger was 5 million. What was being around 200 something thousand become 5 million. So, but at that time it was low. Nobody wanted to invest in it. Now, when it become 5 million, people started calling. They want to invest. Do you understand? So that is trading psychology that people need to understand the best time to act and the best time to leave the market. Now, I don't think you need these ones. I don't think, even if you need it, then you can read it by yourself. Now, let's analyze this thing. Has any one of you seen this thing before?
Yes, I have.
Okay, so I want to draw emphasis on something. Here, high degree of leverage. And retail traders. Now, have you checked on any of the websites? Have you seen where they said 70% of institutional traders lose money?
Yes, well, them even more than 70%.
No, have you seen where they said 70% of institutional?
No,
I
not
think it's
institutional. No.
retail trading.
It's always retail trading. Then have you seen where they say low degree of leverage?
Oh,
Now, the secret of making money is also here. I build a strategy on this. So when I studied the risk warning on different pages, so you could spot out something they're talking about, the secret of what they're talking about. One is that one of the reasons why people lose money is leverage, high leverage. So it means if you play the opposite, low leverage here, kind of when you play the opposite, low degree of leverage, and they play the opposite institutional approach, let me use approach because I won't say trader because it may have a small amount of money and give institutional approach to it. So if you play the opposite, become an use institutional approach and the low degree of leverage, you become more successful. Because from the risk warning, they've already told you the strategies people that are losing money in the market. One, that's why I told people, not in this class, that you should be careful when a broker is pushing you on leverage. Trying to tell you get 1 to 5,000, 1 to 2,000. This is one of the reasons why you lose money. And they're playing on your psychology. You don't understand? Then I don't know some of you who are in Europe market. You see that an European market, the 1 to 30, the approved leverage any broker can give any retail investor in Europe is 1 to 30. If that trader want to increase it, he have to sign some document to the broker or probably show some other evidence that he's a professional investor. It's 1 to 30. Do you know why the regulator allow 1 to 30? Because of with this, it will be difficult for you to lose your money. And it can help you to manage your risk. And that is one of the reasons why almost 90% of brokers left Europe. I don't know how many of you were in the market in 10 years ago or 8 years ago. You see that London-based broker was the top. Once you want to check a broker, check whether they are authorized by FCA. Is FCA? Say yes. How many brokers now? How many brokers is talking about FCA? No, because they don't want to be there. Many brokers have closed down in London. I mean, in the UK and left. They have like give back their FCA license. Many brokers have also left the EU, the European zone. Because of this new rule. This rule came in 2019. They started falling off, many brokers, because they don't want to give you 1 to 30. Because when they give you 1 to 30 leverage, you make more money and you control your risk. They want to give you bigger leverage because brokers psychological, some brokers want to make money from you, not the other way around. So now what I'm trying to say here now, on market psychology, try to play the opposite. How do you give an institutional approach? The institutional investors trade for a long time. They don't trade for a short time, and they trade on low leverage. So now, as a trader, you'll be using low leverage to trade, and you also go on a long-term approach. Otherwise, you won't be a successful trader, to be honest. You won't be successful. You will also be the same like others. Low leverage, and you go for a long. This is one of the major characteristics of long-time traders. Now, it is difficult for you to lose your money if you are using low leverage because it helps you to manage risk, and it's also difficult for you to have a loss if you're on a long time. So the chances of making money is very high on a long time. Do you agree with me?
Yes, sir.
So kind of, it's very difficult to have a loss. One of these is that if you allow yourself for a long time, you have chance of rebounding. Market will kind of always reverse to you. But if you're on a short time, you lose money. Someone will say, what if my capital is small? It has nothing to do with the capital. Because of the minimum risk you can take in the market is 1%. So if you are using $100 to trade and you're using 1% or 2% risk, it means the market must go against you 100% for you to lose all your money. Or if you're using 2%, market will have to go against 50%. So these are the things you need to like put into consideration. If you play opposite, this risk warning here, I've been researching by myself. When I started the risk warning, I said, okay, let me try to act the opposite of all this risk warning. One, I don't want to go on high leverage because from a statement, you can get a fact. From someone's statement, you can be able to psychologically spot out what the person is talking about. I don't know how many of you studied language analysis or analytic. You see that you can analyze language words by words, what that person means. So from the risk, they have already told you the people that are making money is investors, big investors, or people that use institutional approach. And people that are making money are people that are on low leverage. So now, from today, please avoid a broker giving you advertising high leverage for you, trying to entice you. They're not enticing you on anything. They're just trying to make you lose money. Do you understand? Now, for every investment to be successful, you have to consider two things. Sorry, one major thing. Good capital, lower risk, and long-term goal. Now, if you also have small capital, and also have a lower risk, then have a long-term goal, then you also arrive at success. But kind of, if you have a big capital or good capital, you have a high risk management in it, and you have a short-term goal, you have chance of failing. For example, you know that investors would like to go where they can make big return. Now, that's why some enticing investment opportunities catches investors fast, because they are playing on your psychology. They may, if you see where they're making, somebody is making 30% per day, and you see that maybe on the Telegram group is working, what comes to your mind? You want to go and invest there? No, so.
It's true, sir.
Somebody was telling me, if I say from Canada, that he lost $2,000. I was on review. One of our, I was here. I don't know the person may be here, but I don't want to mention the person's name. So he said he lost $12,000 in crypto. I tried to ask him, how did he lose money? He said he belonged to one Telegram group, and the guys, they were doing well. That was also what he told me. And they were actually doing well. They were posting some things, you know. So he now put his own money, only for the whole money to go. So do you understand what play out? So these people play your psychology, you know. They don't, but they don't know who is controlling the crypto platform. You don't know whether maybe is controlled by somebody behind. You know, like they want to control your mind. Only for you to put your own money go. I don't know whether the guy is still there. If you see on that Telegram group, come back there, sir. You also be seeing profit. He be seeing profit. That's why I emphasize more. If you want to do this business, do with a regulated company or a regulated asset that you know that this government regulates this thing. The broker is regulated, you know that you know what you are doing, so that you won't be where people will play on your mind, only for you to come in and everything gone. That is psychological. It's beyond the market psychology is beyond a lot of stuff. So you need to understand these things, how people play on your intelligence, on your emotions, you know, to try to control you and take advantage of your zeal to make more money. At the end of the day, you will lose. And this thing I did here is one of the secrets that made me and even our firms to be in the market for a long time. We don't take so much risk at all in trading. Now, let's go to trading planner. I don't know if you have a question because this is the last segment now. I draw the plan of 1,000. I know that some of us have more money, more bigger money. Any question?
Sir, I have a question. So what do you suggest when you want to add more position to the trade that you have taken? Is it when after the price has, in terms of buying, would you rather it to go up a little bit, or you add some position at once, maybe 3 positions or 4 positions, since you don't want to buy at the higher price?
Is this stacking?
Yeah, stacking. What's the approach?
When you want to do stacking, you need to consider this market will follow. You need to consider the market. It's good to stack on a market that's going in one direction. For like on a breakout market, for example, oil. Oil was a good position for staking. For example, if euro started rising, you can stake. But on for example, let me use euro USD because of it's about to happen. I mean, it's something that will happen in the future. For example, kind of if euro started going up, you don't understand? Now, on this type of market, it's a market that's suitable for stake, not on a hectic market. Market that's going for going on a particular direction. You could place your first trade or within all this area, and the market is a good. Immediately the market is a good, and past this point, you see this point, then you can double your trade. Because of why? It has capacity of continuously going up. Now, if you want to do it properly, make sure that each stake you are taking is in line with your overall risk. And of course, if you're a staker, you shouldn't stay in the market for a long time. So staking come out is good only on breakout. So your overall risk, if your overall risk is 15% or 10%, and the first market you have placed is probably running at 33%. Like maybe overall 3%, maybe 1.5%, or 2, let's say 4%, 2%, 2%. Remember, you have about 8% in the market, and you see a breakout, then you can stake more, maybe additional 2% of your overall risk and allow it. Don't stake outside your risk, no matter what. I'm not saying it's not good, though. You can still do it and make profit, but if you just want to make sure you don't liquidate the account or you don't lose beyond you don't lose beyond your risk tolerant. Use that particular system. I know that some people can stake up to 40% of their capital. Yeah. So staking is good. It's a system of using to double your profit. Me, I stake more, not all the time, but I trade for a long time. Because of that, I don't like to stake. So stake solve a problem of instead of keeping trading for a long time. It look as if you compound your volume. What you could have gained on 400 pips. It can get it within 150 pips of staking. Then you know what I mean. So make sure it falls together with your risk. You know, we have run a course on risk management. It's difficult to start telling you on risk management unless if you want a review. You can do a review. Then we can explain more things to you if you're not able to understand some.
Hello, sir.
Yeah.
There's a
Alright,
way
sir.
I do my
I'll do so.
there's a way I do my own staking. So I want to explain to you to listen to and give me your opinion. The way I do mine is that because I'm a long time trader. So for instance, if I'm risking 2% on the trade, I will let the trade move to a certain position, like passing the previous support. After breaking previous support, I will move my stop loss to break even, which means my first trade must be risk free and wait for it to pull back.
You move your stop loss above your profit, right? Your entry,
So
sorry, your entry.
Yes, I'll move stop loss up to my entry. I'll make sure my first trade is risk free before I enter second trade. Because once the market moves to my direction and pull back, so when the market is about to continue heading to the direction, when I enter my second trade, I'll make sure my first trade is risk free.
Okay, yeah, it's also a good strategy. Like when you have moved, the market have moved again above your first entry, then you adjust your stop loss.
Yes.
To break
so that
even.
even if market dropped, you won't lose money.
Yes, sir.
Perfect. Yeah, so kind of it's a very good one to it's called trailing stop. You can do it to lock up your profit. Oscar, you can borrow that strategy. One. Again, another thing that comes to my mind is also margin. So when you stack and you see that your margin is increasing, it means more money is coming available. You know that as you're making profit, your margin will be increasing. You don't understand? Your margin will be increasing and increasing. So now, okay.
And how I do this is that how I do this is that I'll make sure like the trade get to a certain position. Now, and I will close, and I usually close down 50% of the trade or take down 20% to make sure I'm in profit before moving the stop loss and taking my second trade. So no matter if the trade goes against me and stop me out, I will still leave the market with profit, no matter how small.
Yeah, fine. What of your margin? Do you stick with your margin?
Yes, that's why I said that it must remain that same risk. I'm not adding, like, if my risk is 2%, all throughout the trade, that is when the risk will remain 2%. I'm not adding to the risk.
Yeah, that's a fantastic strategy. Oscar, what he's saying is that when his first trade has gained maybe 2 or 3%, then from that 2%, he will stake on it. It's like compounding it instead of taking from his own reserve or ideal risk.
I understand.
Yeah, for example, you have like maybe $1,000 and maybe the trade has already hit you. I'm sure it is taking high risk. I mean, like that 10%, 20% is actually big profit you are cashing out. I know. So now, let's say the market has gained about maybe $100 from it. So he may lock $50 up, and that $100 has returned back some margin. I mean, some free margin. Then from there, he will stake again, and one trade can, as long as that trade keep going up, he will stake again, and using the reserve, the return margin or the end margin, which is free margin or not the actual margin. Then, and if that one also gain more, then he will also lock up the profit to make sure if the market dropped, it will not lose. And Idris may be taking more risk. That's why he's locking the risk. That's why he's locking up the stop loss. Once the profit appreciate, he lock it up because anything can happen. But it's another way of people making big money. One, in this business, if you take a bit little of risk, you will make more money. But it's good to take that risk when people are afraid. That's just what I'm trying to say. Risk or fear and greed controls the market. That's what makes people gain a lot of money and also make them lose.
Sir, not like I'm taking too much risk. Like most of the time, analyze pips are like market that we analyze my last the last trade of GBP USD from around towards November, October. The trade I predicted like 1,000 pips into the future, and it's just this month that it get to the final target. This month, this month I hit the final target. So as the trade was coming, mostly highest at risk is 3% to 3%. So before, once I normally take my first TP at the 100% retracement. Once it get there, I will take my first profit, move stop loss to my entry, and wait for retracement. Once the market continue going to direction, that's when I enter second trade. So by then, I've already closed down 50%. So if the market go against me, I will leave the market with profit. So I just like, no matter, I don't want to like make profit and give it back to the market again.
Mensa does the same thing. I can remember she told me during my one-on-one class with her. I think I'm right. Is she there? That's something she told me.
Yeah.
So you told me that you lock your profit. Once you get, you lock it.
That's what I do.
Yeah. I've used that strategy before, but what we use in our own is trading stop. When we gain profit, we adjust our stop loss above our entry. That's what we do on our own. I mean, we don't like to lose the capital, especially some of us that use target. When they don't give a target, say this is how much you should return. Then you try to make sure you meet up the target. Because
what of if the market reverses back to that your entry?
Then it will cut because of if you cut it to keep profit for me, just that I've lost some of the profit. That's why I don't use take profit. I only use stop loss. I'm not saying you should use my own, no, but if you can use, but I don't put take profit. Do you know why? I trade for a long time. I look for opportunity that will gain fast, that will gain for a long time. So sometimes if I'm expecting 20% return in a month, or there's a particular account, the owner, we are trying to know whether we can get 20% out of the market. So you may not know the market that will give you 20%. For example, I didn't know that oil we got 1,000 pip within 2 weeks. I didn't know that one, but I know that it will rise. Do you understand? I don't know that it will go to that point, but I know that it will go up. So imagine if I put a stop loss, sorry, take profit, it will not get 400 and cut me off, only for me to come back and see 1,000.
Okay.
Yeah. So now, only that one now, I've met up a target of 4 months. See, if I didn't trade for my company for more 4 months, nobody will call me. But greed will not allow me now. I will still have to trade. So only one trade. You can meet a target for 4 months, even for 1 year. Like let's say you have a portfolio that's you can expect like 50% return per year. Do you understand? Because of big investors don't go for big return. Do you understand? They want 30%, 40%, which is okay. It's easier to make those kind of deal. So, and again, as a trader, those of us who may want to upgrade and become a big trader. So you always want to target less. So if you get more, good for you. Do you understand? So you could use 1 trade or 2 trade and meet your target. And make sure that you don't lose your target back. Because as long as you keep meeting minimum requirement for investors, for your friend, because I'm mentioning other people, because if you want to be rich, only your money can make you rich. You need to build a system that can allow other people to benefit. From there, you make more money. If you just want to grow only your own money like that, it will take you time, unless if you have enough money. Let's just be honest. So that's why if you are learning a business, learn it in a way to benefit another person. So now, if you are doing well with money and you're meeting the expectation, they will always be adding more money to you. Sometimes too, they will go and go somewhere that look enticing and lose money and come back to you. They will know your value when they have lost somewhere. The method that you're not doing well. Only if I still check, I want to add up more money. Even on that one investment my wife did, or my friend confused me, and that they don't say they confess where they have put the money and lost everything. because they have pushed you to do like those people. Is you refuse. They think that those people are doing well, then only for them to go there and lose money, they come back and discover that their own is the best. So that is how it is. So form a system that will give you money, but make sure that your projection is achievable. Don't play on people's psychology where you bust their mind thinking that they will just come and become rich overnight, only for you to end up losing all their money. Investors don't like to lose their capital. Forget about everybody talking about return of investment. Their capital is more important. Even you, a capital is more important, not even return. So that's also psychological. Form deaf ear when they keep shouting on return. Be careful of protecting their capital. Most investors don't think of capital protection. They only think of return. They only think of capital when they have pushed you to the wall. You take some unnecessary risk and have liquidation. Then that's like, what about my money? So you see that kind of thing. So make sure you always protect those things. Now, because of that, I don't put take profit so that I can gain as quick as possible on a good market. So if once I meet your target, any other one is now addition. I can use 3 months or 4 months meet my yearly return. Do you understand now? So now let's go into trading plan. This is how to build a trading plan. I did it on $1,000 because I'm not saying that all of us are only $1,000, but if you want me to give you the one of 10,000, 20,000 based on your portfolio, we can be able to draw plan. Trading plan does not mean that it will be a guide for you. Let's say in a month, as a trader, you are targeting 15% return per month. Do you understand? Some of you, because the money is your own, you don't have a plan for yourself. But if you give it out to somebody, you want the person to give you a plan or an expected return. Now, this plan, I draw it from first month, which is January, to 12th month, on opening capital of 1,000. And we are targeting pips, our targeted pips, total pips in a month, 500. It's a way I'm telling you that I can use maybe 100 to achieve whatever thing I want to achieve. All you alone have gone more than 500. So now, on a 0.03 loss size, I'm so sorry, this plan I built on oil, not on forest. This 0.03 is about 30 cents. Then on a profit value, like value in dollar of $150, then average monthly drop down loss is 6%, which is about 200 pips. Remember, 500 against 200. Do you understand? So in my cumulative, at the end of the first month, I will have average $150. So if I didn't meet $150 average, sorry, 1,000, which is 1,150, which is the closing balance, I will know that I didn't succeed. Because plan helps you to know whether you're succeeding or not. So if I close my trade or my balance sheet become about 1,250, it means I met my target, or I met my target above my expectation. Now this is on 15% profit target in a cumulative form. Then if you go down to how I draw this plan, you see how I increase the lot size here after 6 months. After my 6 months here, after my 5 months here, I increase the lot size. You are quiet. I don't know whether this class is confusing.
No, we are listening.
So we did listen.
We're following.
Mr. Uche, please, like for instance, okay, maybe because I didn't attend your I just signed up. But what I'm really very used to is risk to reward. So that 1 to 2, 1 to 3 kind of thing. This one quite new.
Risk reward, yes, risk reward we have it. It's an appearance video. I can give you a review on it, but we can still make it as more another topic we'll discuss in the future. So risk reward issue is in trading. It's not in trade. It's not really in a trading plan. For example, somebody give you, okay, you give yourself your fund. Let me not use another person's money all the time. So you're trading for yourself. You have a plan, but now you can use the strategy of risk reward to be achieving your plans. Do you understand? It's not exactly like having a plan like this. So risk reward ratio is different. It's a little bit different from having a plan. Like you see that here, that's cumulative, where high investment can run in a cumulative form. So within 5 months' time, then I will increase my volume to 0.04.
Okay.
Then you see how the investment has accumulated from 15 to 80%. So around my 5 months' time, which is from now to May, we should be expecting at least 80% return of 1,000. I know that some people can be angry about it because they know that they will say it's too long to on forex that you can make money as quick as possible. So on 5 months' time, we should be expecting 80%. So if within this 5 months' time, maybe your capital already is maybe 2,000 or 2,005, it means you're meeting more than your manager or your boss, or you are allocated to yourself. It means that you're meeting your expectation. Do you understand? So maybe if it's around 30% or 40%, we know say, okay, average, you're going below your expectation or average of your expectation. Do you understand? So now, this thing will continue. You see that this 500 people is constant. I don't know whether I've told you guys, when I started making money around 2013 through a trading plan, because Babalola was the one that taught me these things. I used to trade before, but I wasn't making profit until I met him in 2013. So he drew a plan for me. That time, this plan was $58,000 in 1 year from $1,000. So $58,000 in 1 year. That was the plan he gave to me. We also have the one of $10,000 that was in a big amount of money. I can't remember. Now, our target was 400 pips per month. And our target per week was 100 pips. And he was meeting it. Because he would give me the analysis directly. And anytime we didn't meet 400 pips in a week, we put it down like on a record that we are owing ourselves 400 pips. But because he was the one giving me the pips, the analysis, so he told me that he's owing me. So anytime he met it up, he told me, hey, I've met your target for this week, so maybe next week. So if you met double of that week, he told me, hey, I've covered for 2 weeks target. He was so precise about it. So it was 400 pips per month, 100 pips per week. Sorry, 400 pips per month. But now, this same thing is what we use in using 500 pips per month, which will give us average 25 pips per day. And I think 150 pips 125 pips per week. This trading plan. Then, when you continue with this pattern, till around 7 months, so you see how I change my volume. My volume enters 0.5 within about 7 to 8 months. And I did not change it until you get to 11 months. But remember, all these are constant on 6% drop down. Then by 11 months, we should be expecting 200% return. And we build it up totally to 12 months, where we are having average return of investment about 220%. So at the end of the year, you may make more than this, or you may make less than this, and the average drop down is 72%. In case of losses, we shouldn't lose more than 73% of our entire drop down. That's I'm not saying the capital, because of the we're talking about on the drop down. So on each month, average drop down is 6%. So now this is how to manage portfolio, or how to explain to a customer too about portfolio management, or mostly portfolio management, because in this business, what is common is portfolio management. Asset management is not really common. Because people want to have their money in their account, they want to see everything that's happening. So you become portfolio management. So you may draw the plan, try to let the person know what is how you manage your risk. If the person is okay with it, then the person will give you money. or if it's your friend, whether it's a friend or unknown person, or you draw your own plan, how you manage your own. If you're okay with it, then you use it to trade for yourself. So if the risk is not okay, you can make your risk 10%, 20%. That's what is called overall risk and drop down risk. We knew this is before all this problem started. I think, of course, the people that started Profim are also brokers. They drop those things and start giving people the same thing to trade for them. Of course, they are started making money for people as well. So you can't be trading under a company without having a guide. The same way you put yourself on a guide. Any question? I have this, in case you want it, I can send it to you. But we have it on different amounts. But this is just for educational purposes.
So we need it to.
So have you seen the possibility of moving from here? So at the end of the month, we make a total profit of total PIP value. We're expecting 2,000 PIP the whole year. But I can tell you sometimes we used to make about 12,000, 13,000 PIP in the whole year. Again. Then, of course, we have cumulative of 0.52 pips. This is on oil. Forex is different value. Then we have estimated return of $2,600. Then if you add it up to your $1,000, so we are going to close our balance with $3,600 at the end of the year. Now, question is this thing achievable? Do you think it's achievable?
Yes, sir. I think it's achievable. But what I'm thinking, what about the losses, or what about the months that you will not meet up the target?
Yeah, that is why we have drop down here. So look at it. Drawdown is this one. Average monthly drawdown per pip. Now, remember what I discussed about psychology. Emotion is there. Don't use emotion. If you are trading, if you didn't succeed that week or that month, you hit a drawdown, just leave the market. Maybe I will send that fight because not everything I put on that fight I read out. Do you understand? I will send it to you so that you take care. So once you lose money, I saw it's there. Once you lose money, don't trade. I mean, you lose your maximum money, like what you think you should be able to bear, or you had a loss. Don't stress yourself again into trading. You leave. Don't trade to revenge. I think I put it somewhere here. Don't trade to revenge. It's one of the way of building a strong trading psychology. Do you understand? So in a month or in a week, we are at the end of the day, accept losses and focus on that's where I put it here. So in a month, where at the end you did not meet a target, it will not be at the record that this month I did not meet my target, but be calm about it. Don't like start thinking, how do I recover it? In the business, don't try to recover. We don't recover money here because of you don't trade backward. It will help you if you want to set up a trading firm that other people can benefit. Make it clear that you people only trade forward, not backward. It's not like where you go and recover. No. So if you lose money, put it clearly that they lose money. So this is also why some account can be taken from you if you get employed by asset management company and they see that you're not doing well with the company, you're even contributing to the losses of the company. Because if the company keep losing money, people who invested into that asset management will leave. That's what most companies perform more better than other one. I mean, I'm talking about traditional investment firms. Some of them, because they're doing well, people invest more money with them because they have good staff, good traders who are doing well. And it must not, some of them are not, of course, on CFD, they are into other market, but they are performing very well. While others are losing money, people will run away from them. So that's why if you keep losing money, they say that their program is too much, people will leave. It happens everywhere. Even our clients, those who does auto trade on alpha trade on GFT, anytime they lose more money, they quit. It's just as simple. So anytime they get more money, they put more money. So the goal of those companies is to make sure that they make more for investors so that investors will stay. Do you understand?
Yes, sir.
I don't know. I'm trying to look for that in here. Any other question? That's where I put it. I don't know, but it's there. Don't
you just passed it.
Where is it?
The end of number 1. At the top of number 2.
This one.
You have passed it. Slightly above that 2.
Here.
Yes. Revenge trading after losses. Frustration may lead to revenge trading after losses.
Okay, here. Oh, yeah. Revenge trading. Yeah, here. So don't revenge. It doesn't end up well. So if you put your plan and it didn't meet up your plan, just let it be. Then you plan for other things. For other months. So at the end of the 12 months, if you're able to meet 7 or 8 months success, then they accumulate it. They will know that the 4 months that you lost will not be much, will not override the one that you gain. It's also part of this reward. Cynthia or allies ask me now. Concerning this, well, let's say in the whole 12 months and you made 70% success, like 12 months, 70, let's say 10 months, it's easier for me to understand. So let's say 10 months, 7 months out of 10, you're trying to close at profit, means that you met the target. And the 3 months was the month that you had losses. Using the trading plan, you will see that it's difficult for you not to be at profit because they have already known that what is expected of you. Do you understand? It's easier. You can, if 6% is too small for you, you make it bigger than what you think. But professionally, you can Google it. Most professional traders trade on 1 to 2% risk. That's what they trade. So if you look at it, e.g., it's 1 to 2% per trade. Yeah. Most professional traders. And I sometimes don't also trade more than two trade. There's another course I'll give to you guys, how to recover losses. But it's different from revenging, like how to prevent losses. For example, it's called risk recovery, not to recover the one you have lost entirely. So when you're trading and the position is still open, but it's at loss, you can be able to recover the one. But if it has closed, it has closed. You don't go back to recover the one that has totally closed. So if you're losing money on trade, you want to counter it and make more money. That's how you can be able to do it. It's a practical. But it's easier for me to show you on a trade that is already happening. Then you see how it works. Any question? I'm done. 6 minutes to go. Okay, somebody said,
can we get this note?
Sorry?
I say, can you send a note to us?
Yeah, of course, I'll send it to you guys. I mean, post it on the page, then anyone can download it. Somebody asked me if I can make a plan for 10,000. Yeah, I'll make a plan for 10,000 and send to you. Is it using this parameter, or I should increase the risk or reduce the risk?
Same parameters, please.
Okay. I'll make it and send to you. I think we have it already. I will search for it and send. Yeah. Somebody say I have. Okay. Any other question? So do you guys learn something about trading psychology, or what do you think you can implement in your own trade?
As for me, I must say this is my best class so far because this is what I've been battling with time because I've mastered my trading somehow, but I still have problem with this psychology of a thing. So this is my best class so far.
Oh, okay. Any other person? So you know that in a class you must learn 1 or 2 things. You may not catch everything. You must learn something. The day I did trading psychology, what is in my head today is that I have to be afraid when others are greedy, and be greedy when others are afraid. That's what entered my head. I don't understand any other thing the man was talking about today. Today, that's what is ringing in my ear. That's why if market is too good, I become afraid. If market is too poor, too dark, then I become greedy, and it's helping me. He taught a lot of things in that class. I don't know. The point I made is one I'm using. Unless if I keep revisiting his class, then I'll capture more. So you need to get one or two things for yourself too. Let me know if anybody learns something. Can you make?
You also talked about building low leverage strategy. The strategy which is used by institutional traders, it is also good for a long-term trading.
Yes. Good. So I would write some notes about how institutional traders trade. I'll write it and post on the page. So the things they consider, how, so if you start doing it on your account, it doesn't matter. Some of you have a lot of money that's suitable for institutional account, but you're using a retail trader account. Some of you have about $10,000, $20,000, $100,000 that should be used as institutional, but you apply a retail approach to it and perform poorly or obviously have more losses. But you may not know that money is enough to become an institutional investor. So it could be you doing it by yourself. So apply those rules, you make more success. Who agree with me that not losing your capital is part of success?
I agree because
I agree.
there's one trader say that if he gives someone $10,000 and after a year the person returns the $10,000 to him, he will congratulate the trader that is a good trader.
Yeah. So not losing your capital is part of like that Jeju air crash that crashed. One person survived. So that person that survived, isn't a part of success for him or her? But some people don't want to hear that one. But not losing your capital is part of success. So you build a system that secure your capital and give you profit. So that at the end, if you didn't make profit, at least you can go home with nothing. It's frustrating, to be honest. So I'm a business guy. Where you invest money and lose everything. I don't know how you guys feel. I used to feel bad about it. Do you understand? I mean, lose everything to zero. No, I used to feel bad about it. At least let me go with something if I can make profit. So any other question? Somebody said learn how to trade forward. Okay, learn how to trade forward is the key. Okay, probably that's what I've learned. I'll make it on currency. The one I have that is on currency is on big return. I don't know whether you guys will like it. It's on big return. It's big, like the return is big, but I've reduced those risks. I will try to reduce it to the one that is okay, because sometimes some people may find it difficult to achieve. This one is easy to achieve in a year. Okay, so it's 2 hours now. So I think we have to go back to work and all that is.
Mr. Uche, please consider those of us who are interested in commodity so that we put in classes for us too.
Yeah. Yesterday was commodity. Okay, today we analyze on forex, but commodity will be added. We have done 2 classes on commodity, right, this year.
And you are owing us a natural gas. So you say natural gas.
Okay, natural gas. Okay.
So next week at least.
Yeah, I'll be focusing more. Okay, look, sometimes I can just feed myself. Fine. So for those of you, if you think you need more, I think somebody is unloud. If you think those of you who are on a 1-month class and you think you need to learn more, you can upgrade to 6 months class if you can afford it. But the only thing is that I will give you a 20% discount by myself, so that it will be easier for you. Because after the 1 month, if you check, maybe it has a last, we may stop allowing you in the class. Not we will. So in case you want to continue, I'm an advocate of long-term learning, because it's easier for you to understand it more in a long time. Please, those of you that are not trading, please continuously start trading, please. It will help you. Those things we're analyzing, just implementing on them. If you don't want to use it on live, be using it on them and try to know how the success rate will be, where your emotion is not attached to it.
And sir, what is your conclusion on oil for another entry?
If you have buying and buying, those are by me. I'm not looking for buy on oil. I'm only looking for sell.
No, I'm talking about sell.
I will look for it and give to you, but even as it is, the price is good, but I will look for it properly and share it on the group. Be checking on the group. Even as it is here, it's good to sell oil. For now, I'm trying to tell you what I'm doing. I'm trying not.
Okay,
I'm not,
sir.
not do. I'm considering selling my oil. It's a sell-off price I'm looking for. I don't want to continuously buying this thing because of people will be buying now. The market will crash. That's psychology. Like I told you guys, I don't know if it's on this class. I told you that oil can easily fall and rise.
Yeah, so
sorry.
Sorry, where will be your stop? You said your stop loss will be at the either the resistance there or the one the other side.
Yeah. I put my stop loss here. Do you know why? Assuming the buy strength is still there, so that it will take some time. I used to have 3 entry in oil, entry 1, 2, and 3.
Okay.
So if I didn't get the first one, that chance I'll start getting from the second one. Second one, I'll use the bigger volume from the one I used in first. But see the third one, that one I used to strike more. That is something I want to show you how to like recover from losing trade. You see that one, when that one is gaining, it will be gaining all from, and the other one, those ones too, that was not gaining, will be gaining at the same, will be recovering. Before the one will gain like half of this one, have all been on profit.
But all will be within your risk, the risk that
yes, all will be within my risk. I don't lose my capital in trading, which I believe all of you, if you use the way I trade, you make more money from it. I mean, you trade for a long time without losing capital. If you have a good amount of money in your account, it's like oil well. The balance will not be constant, but you'll be cashing out. If you check profit you're making on that account, you know, it fluctuates. The equity will fluctuate, but you'll be making money. To be honest, you just be making money. It not be like a police officer. No, you just carry a gun, come out on the road and collect some money from the public and give your wife to cook. If you just ask you, there's no food in this house, you just say, okay, I'm coming. You pick your gun, call your team member, block one, collect money. They go back. And that's what you be doing on trade. You check, you are broke. And you have money on the account, you just start looking for opportunity. You cash out pick, then you withdraw. You buy your eyelashes, buy your clothes, or take yourself out. It's like oil. You just keep drilling from that oil, that market. But the balance will be fluctuating, but you'll be making money. That's one thing about trading. That's why if you're a trader, you may adopt the concept of mopping. If you don't want to build like capital growth strategy, you can build, which is value. You can do value growth strategy where your investment can increase, but then you can be mopping it almost all the time. You can separate your balance from your earning. And from that, I will encourage you guys, if you have big money, want to set up good portfolio, set up proper portfolio where you'll be earning more money. Then I wish you guys all the best. I'm ending the class now. If you have any question again, contact us. I'll be happy to assist you. The meeting is recorded. I will make it available to you guys.
Thank you, sir.
Okay. Good day.